Hi everybody, my name is William from Own This Property and welcome back to the channel. By the time you're looking at this video, you might have already placed your check at either Tengah Garden Residences or Vela Bay, and you might still be confused after watching so many YouTube videos, hey, which is the better buy? So in this video, we are going to 一针见血. I'll be running through short, sweet and succinct analysis on which is the property you should buy based on certain criteria. As always, we'll be analyzing properties based on our OTP framework and the 5 key factors. This is exactly how I will be analyzing and also advising my clients on how to look at these two developments and also maybe prepare for the upcoming launches this year. So do stay tuned to the end of the video to watch my conclusion on that. Usual disclaimer, everything that I share with you today is my own opinion and research. Always do your own due diligence. And if you like what you see and think that we are a good fit together, do reach out to me on WhatsApp and I'll be happy to share more with you over a coffee or Zoom session. Because this video is going to be short and sweet, I want to go straight to the point. And first up, the first factor, which is attributes. If you take a look at Tengah Garden, the unit mix is good. 60% are 3 bedrooms or larger, so this is definitely more catered for an own stay. Over to Vela Bay, it is not as good as Tengah, but still not the worst. Small units are still less than 50% at 43.5, so it's still pretty okay considering the location that it is at. Density wise is another thing that I like to look at, and it really reflects where the property is located and who they are exactly targeting. Tengah Gardens, clearly this is in the OCR. The density is comparable to other OCR launches that we have seen this year. But for Vela Bay, even though on paper it is OCR, you can see that it is much denser than Tengah. But this density is kind of in line with the other more better location properties in this chart. Here's an overview of all the attributes side by side. And while both are OCR properties, they are drastically different properties. Despite being next to the MRT, I think considering the location, we will want to drive, right, if you live in Tengah. So the unfortunate thing is that Tengah, there's only 60% car park lots. Vela Bay, just 50%. So both of them are just not fantastic. There's no way I can sugarcoat this, right? But other than the fact, facilities are pretty good for Tengah Garden, especially Tengah, you have the first ever paddle ball court. And then Vela Bay, even though our land is slightly smaller, you still get full facilities such as a lap pool and a tennis court. Views-wise, Tengah large units, the south-facing units, you do have the Tengah Pond views, but Vela Bay ultimately stands out the key unique selling point of people wanting to live along the East Coast. 70% of the units will have sea-facing views. All in all, I think that both of them have their pros and cons. You know, Tengah gives you everything you want in a condo, especially the impressive facilities. But the only gripe I have again is 60% car parks, right? If you live in Tengah, you probably might want to drive around Singapore, even though you are next to the MRT. So minus point for that, and Tengah scores 4 out of 5. Whereas for Vela Bay, there's even less car park lots, 50%, but okay, it's slightly in a better location, also next to MRT. So the thing that really stands out ultimately is that 70% sea view. So that kind of even out the negatives, and it scores 4 out of 5 as well. And then on to location, again, just going to speed run this. Very simple over here. You have probably seen a lot of site plans, location plans. So I just wanted to point out to you the differences over here is that yes, both of them have an MRT. For Tengah, you are next to Hongkar MRT. And for Vela Bay, you are next to Bayshore MRT. But Tengah ultimately is a brand new estate. People have called it Ulu. I think all of us, the oldies in the army, right? But my camp used to be even more Ulu. It used to be at Sungai Godong. That's probably the most Ulu camp in Singapore. But back to this, I think ultimately Singaporeans who might not have any exposure to that location might be pretty apprehensive, and I think that that's totally understandable. But I think we still have to trust the government and see what they have done in Punggol, some place that nobody used to think of living. Over a long period of time with enough transactions, entrenched families living and staying there, the demand definitely will pick up over the next 5 to 10 years. Whereas for Bayshore, I think more people might be familiar with it if you go to East Coast Park today. So Vela Bay is that newest condo over there. That location is also very ideal because of the sea view. So this is more of a location that is more aspirational. Although there's nothing there right now, the Bayshore precinct is a pretty new precinct. But going forward, we also have the largest SAFRA, and there's also going to be an integrated development at Bedok South, 1 MRT away. But most importantly, it is 1 km to Temasek Primary. So parents who want to buy a property for school, this will be the one for you. So while both properties ticks the box of MRT, you get enough amenities, Tengah does lack that reputable 1km school at the moment. And while there are some shops directly below you for Tengah, it is still pretty small. It's only about 3,000 square meters. Probably you have sufficient space for a supermarket, maybe a food court. But I do recognize that this is not a location for everybody, so I score it a 3.5 out of 5. And ultimately, Bayshore, it is an aspirational place to live in, just like District 15, although this is District 16, we're just next door. This is going to be an aspirational buy. It will attract buyers from all across Singapore to want to live in it. And for the location, I score it 4.5 out of 5. On to our third factor, which is the price and profit analysis. And first up, prices. These are the indicative prices from the developer. And for Tengah, you can see that the prices start from as low as 1.7-ish per square feet, but the average is likely going to be about $2,150 per square feet. And notice how the larger 3 and 4 bedroom premium units over here, their starting from price is much higher at about 2,050, and that because these are the units that are facing the Tengah pond. You get unblocked nice water views. For Tengah, the profitability and rentability, we do have to kind of be a little bit creative, and the reason you can see is that a lot of the cells over here are empty because these are the ECs that have been launched in that area, but they are nowhere near completion or MOP, so there's no transaction data yet. But what's interesting to me is that if I stretch the radius, we have, for example, the Quest and also some of the lakeside properties like Lake Grand and Lakeview. The interesting thing is that 2-bedroom profitability is actually very close to that of the 3 bedrooms. It's just 3.53% versus 4.09%. Don't forget also that over the past few years, there is a lack of HDB upgraders in the area, right? Because the HDBs have not been completed, they have not reached MOP yet, but this is going to change drastically going forward. In addition, Le Quest, maybe the performance has suffered a little bit over the years because it does not have an MRT at the moment. Rental-wise, it is very strong. There's a very strong pool of tenants over here. I personally have actually rented and sold a Le Quest unit before. So Dulwich College, which is an international school, serves as a huge tenant pool over there. For the price gap, Le Quest again is our closest comparable in terms of the resale properties over there. But I think if we widen the radius again, you have lakeside properties. They are already transacting Lake Grand at about $1,900 per square feet. And this is even before URA harmonization, right? So Tengah is definitely well priced at $2,150 per square feet. This is a very narrow price gap to the resale comparables. The EC price gap, it might look very crazy and wide, right? You can see what, $496, $186 per square feet. But don't forget these prices, I took the average transacted prices, right? And obviously these transacted prices, well, even 3 or 4 years ago, definitely they used to be lower. But recent EC prices, even in this area, have already reached $1,759 per square feet at Auto Place. I think if you're entering a normal condo without MOP requirements, the price gap is very safe over here. And for Vela Bay, the prices start from about $2,400 per square feet, but my estimate probably we're going to average around $2,850, $2,900 per square feet. Now, definitely the sea-facing units will have that premium priced in. And I've also been told that you need to get at least about 10 stories and above to clear the canopy to even see the sea. So actually, if you have the sea-facing unit that direction, the lower floors might also be a little bit noisy because we have the expressway over there. So this is something that you really need to analyze on the launch day. And over the years, with the experience I have joining clients in the queue while waiting to choose our units, what I do on the spot is calculating the price premium that you should be paying for a good facing versus a not so good facing, right? So as an agent, my job is actually to advise you objectively, hey, is this premium worth it to you or not? For Vela Bay's profitability, it is very strong over here, and this is even though there are super old properties like Costa del Sol and the Bayshore. This is a clear reflection of the very strong own-stay demand in this area, with 3-bedroom being the most profitable, 5.36%, even more profitable when the 4 bedrooms over there. But this is also something that maybe because it's very old, a lot of the 4 bedrooms are no longer on sale anymore, so lack of transaction volume does contribute to the slightly lower returns. But take a look at the 2 bedrooms, right? The 2 bedrooms performance is also very, very good, 4.67%. A lot of people again say that, hey, this YouTuber or this analyst say that you shouldn't be buying a 2-bedroom, right? 2-bedroom not sati. But if we really just be objective, look at the data, I can assure you that this area has very strong not only rental but profitability for the 2 bedrooms. For the price gap for Vela Bay, the price, if you just look at the sticker value, right, 2.850 per square feet versus the resale is less than $2,000 per square feet. It might be shocking to you, but again, that is a very simple analysis. Here I own this property. If I were to wear my former CFA charter holder hat, you will realize that we focus on relative value and not just the sticker price. So after we adjust for the age gap, the premium per year is only $33 per square feet per year, and that is definitely low. I've done this analysis for all of the new launches condos in Singapore. Anything less than $40, less than $50 per square feet premium per year is considered a good value buy. So what I've done over here is the price gap for Tengah and also Vela Bay. But if you would like access to all the other price gap analysis of condos and new launches coming up this year, do reach out to me on WhatsApp, or you can also fill up the Google form that I link below and I'll share with you my ultimate guide to new launches 2026. In summary, for the third factor of our OTP framework for price and profit analysis, I think both of them are pretty equal, 4 out of 5, but their reasons of this score is very different. Now, Tengah Garden, the price gap, I've already shared that it is very low compared to the EC, right? And EC essentially is kind of like your price floor in Singapore. Even if I were to pull out further surrounding properties, the profitability and rentability is very strong. So I'll cover also our exit strategy later on why I think that the profitability will continue to be strong, if not even better, when it's time for you to exit 5 years later. Vela Bay, on the other hand, if you just look at the number, it looks like there's a massive price gap. But again, if you adjust for the price gap on a relative basis, the price gap is actually very narrow. And this is ultimately a very aspirational place to live in. It reflects in the strong data for even the 2 bedrooms over there. There's a high profitability and a strong rental yield. With buyers staff of a property for over 25 years, we'll have a very good case study that I'll share with you in the exit strategy section of this video later. On to another signature OTP framework analysis is our supply ratio. The lower the supply ratio, the better it is for you. First up, Tengah Gardens. Over here, I've shown you the 2-bedroom supply analysis, and this is very safe. 4.8% is the current supply ratio. Reason is because if you take a look at the ECs are generally starting from 3-bedroom and above. The only EC that has 2-bedroom is Koppen Grand, and there's only 11 2-bedroom units at Koppen Grand, right? So contrary to common belief, again, people might always hear that, hey, you cannot buy a 2-bedroom. I think once you look at the data and you see that next time when you want to sell, who is the competition, right? There's no other 2-bedroom options in the area, and it's easier for you to exit even if you are an investor for Tengah Garden residences. But again, the caveat is that ultimately you should still try to buy a slightly larger 2-bedroom, maybe a 2-bedroom 2-bath or a 2-bedroom plus study. If your budget is less than 1.4 mil, unfortunately my advice is the same to everyone. Please go ahead and buy a resale property instead. And for Vela Bay, I look at the 2-bedroom supply analysis, and I've already mentioned in my previous section that it's super profitable, and right now the supply ratio actually looks higher than Tengah. It's 7%, but if you zoom into the numbers, you'll see some very funny numbers over here. You look at Costa del Sol, there's no supply right now, right? But if you take a look at Bayshore and Bayshore Park, 51 units and 25 units. It's like what? It's like a newly TOP project kind of supply, right? But it's actually not. If you go in, there's a lot of opportunistic sellers trying to catch the right or the wave of Vela Bay to try to sell their units. But ultimately, if you ask me, having served resale buyers for the past 7 to 8 years, people filter based on a few things, right? The first thing they filter is on price. The second thing they filter is on the age. And if you take a look at Costa del Sol, take a look at Bayshore Park, essentially all these properties are not going to appear in the search in Property Guru for properties for 2-bedroom buyers because they're just too old, right? So in this case, when you're 30 to 4-year-old properties, the people looking at such properties, they are going to be drastically different from the people that you are going to sell Vela Bay to 5 years from now. If you wish to receive the full in-depth supply ratio of the 1, 2, 3, 4, and 5 bedrooms of Tengah Garden and Vela Bay, do reach out to me on WhatsApp and I'll share with you my full spreadsheet. In summary, Tengah Garden, the numbers do look good, but that's only for now. I do have to caveat that there will be future EC supply. The 3 bedrooms from the EC, such as Koppen Grand, will be the first to MOP in 2032. And 2032 onwards, there's also more influx of that supply. So on paper, Tengah, the supply ratio might look lower than Vela Bay, but if you dive into the numbers, what I realize is that Vela Bay, you have a lot of those kind of try listings. So I think that Vela Bay supply is very different just because the age gap to the resale is going to be 3 or 4 decades. I think that the future resale buyers imagine 10 years down the road, Vela Bay is only 10 years old, but your resale condos are going to be 50, even 60 years old. So all in all, I think for Tengah Garden and Vela Bay, even though they score the same score again, the reasoning behind it is very different. On to the final factor, this is our upside potential and exit strategy. First up, Tengah Garden and the transformation story is very, very clear. Tengah Estate is Singapore's newest HDB town ever since the development of Punggol Estate in the 1990s. It has been a really long time coming. So this is going to be 700 hectares. It's going to be a first car-free town center. We have designated pedestrian and cycling paths. And total, there's going to be about 42,000 homes earmarked for this new estate. 30,000 will be public and another 12,000 will be private housing. And for Tengah, actually, it's going to split into 5 theme housing districts. Over here, you have like the Innovation District. Then 5 regions would be your Plantation, Garden, Park District, Forest Hill, and Brickland District. So Tengah Garden Residences, we are in the Garden District, and it is going to be the first mixed-use development in the entire area. And of course, we are also next to the MRT, Hongkar MRT. So you can just see the massive scale of this area based on this picture that I show you over here. But most importantly, the exit strategy, right? People always worry, and I guess it's quite normal, right? If back then people talk about Punggol, who would want to live there? But fast forward 10, 20 years now, because ultimately HDB drives the demand of condos in the estate. And once you have this amount of HDBs, and mind you, there are a total of 28,880 HDBs coming up there, and there's still more to come, by the way. So these people would form kind of like your first gen or your people who will be entrenched in that area. Come the TOP of Tengah Garden, which is around 2029, 2030, there's going to be more than half of these 20,000 plus units going to reach MOP, and the remaining half will also MOP from 2030 all the way to about 2032. Now, if you compare Tengah to Vela Bay, it is very different. Of course, in terms of the scale, it is not as huge as Tengah, but the Bayshore precinct is definitely something that is maybe branded as a little bit more sexy, right? This is the East Coast. You are starved for properties for the past 25 years. Costa del Sol is the next newest resale, but it's already more than 20 years old. So a lot of infrastructure and amenities will be built here over the years. This includes the largest SAFRA in the entire Singapore, and the future integrated development, one MRT stop down at Bedok South. So this commercial space is about 22,500 square meters, slightly smaller than Woodleigh Mall only. For comparison, Pioneer Mall, the most recent integrated launch, it was half of that. It was only 11,300 square meters. So Vela Bay, you will truly be the first mover advantage. Again, this I think to me is always like kind of like a marketing term, right? Because over the years, I've done so many YouTube research videos. Sometimes it's good if you have first mover, but sometimes it's actually not good to be the first mover. So the key question over here boils down to the price that you can get at Vela Bay. If you tell me that today Vela Bay, you're going to set the benchmark price in the OCRD, and not only that, you go and buy the highest price, $3,300 per square feet, if that's the top floor unit, right? I think there's no first mover advantage, right? Essentially, all your first mover advantage has been eroded by the premium price that you pay for that particular floor. And I promise you that I'll show you a very good case study at the end of this video, and this is it because it shares a lot of similarities to Vela Bay. When I first started property, this was back in 2019, there were a lot of case studies of buyers complaining, wow, too expensive, record price, benchmark price. And this is none other than our nearby neighbor Seaside Residences. Seaside Residences back then, it set the new benchmark price, $1,700 per square feet. And that was more than $900 to $1,000 per square feet more than the surrounding property. So over here, we have like your Villa Marina, Mandarin Gardens, which are also 99-year properties. So of course, we have the benefit of hindsight. But let's take a look at Vela Bay. We are paying about $800 per square feet more than Costa del Sol. And this is even before adjusting for URA harmonization. So I think that today Vela Bay represents very similar characteristics. If you ask people, they will say the same concerns. Wow, so expensive relative to resale. But I think now that we have enough data, with a little bit of the benefit of hindsight, Seaside Residences today, from the chart, you can see that the performance, the ROI is much higher than the resale comparables over there. So all in all, the fifth factor in our OTP framework, what is the score like? Tengah, the demand for the HDB is so apparent. The next EC to MOP will also only be about 2031, 2032. We got a good 1 or 2 years head start compared to the EC. But again, once the EC MOPs, the common concern is that it will tank the prices. But no, it will not tank your prices you are actually pulling up the EC price. I'm not denying that EC buyers, hey, you guys are going to be the most profitable on an ROI basis buyers out there. But it doesn't mean that if you buy a condo in an area with ECs that you are not profitable. In fact, you are also going to still be very profitable as long as the attributes are right. And you can see based on my OTP framework that Tengah Garden does score well on the other attributes as well. So in the 5-year holding period, I think that the exit strategy is clear and strong, and I give Tengah Garden a 4.5 out of 5. Now, Vela Bay, the demand is not as obvious, it's not as quantifiable. I can't draw the HDBs around in that area, 20,000 units, because there isn't any HDBs nearby that will MOP soon. At least in that shorter 5-year holding period, I do score Vela Bay 4 out of 5, slightly lower than Tengah. However, this is still an aspirational place to live in. If I talk to buyers who used to live in Tampines, Bedok, Pasir Ris, Tanah Merah, hey, they really don't mind, or they actually aspire to live in East Coast Park, especially if you are a sea-facing unit. So this is testament to the demand over there. Seaside Residences is a very good example on how profitable not only the 3 bedrooms but also the 2 bedrooms over there. So the Bayshore precinct is going to be amenities packed in the future. So coupled with the fact that Vela Bay, we are the first mover in the area, we have a future Bedok South coming up, likely going to be selling at a higher price. I think that the exit potential in the long run is also very strong. Now that we know the score for both Tengah Garden and Vela Bay, it's about a tie over here. How do you actually decide which is the better property for you? For any property purchase, one of the first questions that I ask my client, hey, what is your holding period? If your holding period is targeted to be a little bit shorter, most likely you are an investor, right? Because if you buy new, you hold 5 years, you won't even stay in it, right? So it's less emotional. And I do think that the HDBs being MOP in the same period as when Tengah Garden were to TOP, it's so clear and obvious that there's going to be a huge pool of HDB upgraders over there. Holding period wise, I think that Tengah Garden wins if you have a shorter holding period. Whereas for Vela Bay, you do have to expect a slightly longer holding period of about 5 to 10 years. And the common question is, hey, I want to own, stay, and investment, right? I hear you. But if you really were to just look at it very objectively, if I look at Tengah, I just feel that it's more of a good buy if you're an investor. Just because the location, there's no way to sugarcoat it that it's not something that will appeal to own-stay buyers coming from the north, south, or east of Singapore. It would probably only attract the westies in Singapore. Whereas for Vela Bay, I serve clients who I actually sold their Bukit Panjang HDB and we shifted all the way to the east coast as well. So definitely for Vela Bay, the price gap is good, the supply ratio is good, it's good for investment, but just take note that you have good own stay and investment attributes for this development, but your holding period must be a little bit longer, at least 5 to 10 years. And then finally, of course, we are limited by budget. The key advice that you might hear is that try to get as big as possible. But that's also not true, right? If you look at where Tengah Garden is, who's the buyer for 4 bedroom over there? So Tengah Gardens, you want to target a palatable size because the buyers over there are going to be limited by budget. I think in Tengah Garden, if your Q number is great, a 3 bedroom premium plus yard is actually going to be the sweet spot for you. You don't always have to go and get the biggest unit over there because I just struggle to think of who is going to buy that very huge and expensive 4 bedroom from you next time in the future. Whereas for Vela Bay, of course, you need to have a higher budget over there. But here, the demand, the profile, there are a lot of affluent buyers. In my previous video, I left the link above where I talk about the wealth transfer in Singapore. This is exactly the kind of location whereby I see that wealth transfer happening. Parents supporting their kids, giving them a little bit of kickstart to buy a property in this area. And a lot of the buyers over there are cash rich. You need to have a higher budget over there to even enter the East Coast Park area. Finally, I think the key trade-off is you need to ask yourself, what do you value? Do you value size over location? Because if you do, then Tengah Park's for you. But if you actually value location and you can sacrifice size, right? Instead of getting a 3 bedroom, you can live in a 2 bedroom, then the second choice, Vela Bay, is the one for you. I hope that at least clears up some of your doubts or concerns. But again, this video was meant to be a quick fire, short and sweet version. So if you like my analysis and think that we are a good fit together, do reach out to me on WhatsApp. And I'll also be happy to share with you my in-depth analysis of all the condos, all the new launches coming up, their price gap, their supply ratio, and their profitability. As always, don't forget to like the video, subscribe to the channel, and I'll see you in the next video.